Swing trading is the topic that we are going to be going over. What is swing trading? How does swing trading work? Now, what does it mean when we want to swing trade a stock? Well, it is subjective in a sense. It is, am I going to just hold it overnight, or am I going to hold it for a few day to a few week span? We have day trading. Day trading is going to be in and out within the same day. Swing trading is going to be in and out probably within a few days span. Some traders may say that's within 2 to 3 days. Some people may go a little bit longer and say maybe 1 to 2 weeks. But regardless, it's not a long-term hold, but it's definitely not a day trade either. You would be holding it over for a couple of nights. Now, let's talk about swing trades and the way that we can be able to get involved in our swing trades. So, first things first, we can always get involved with shares. Buying shares of a stock and being able to hold it for a multi-day period. Now, what is so great about shares? Well, there is no time decay. And when we have no time decay, we can just keep holding and holding and holding. When we have shares, there is nothing that is going to change the value of the shares other than the price. When the price goes down, your profit goes down. When the price goes up, your profit goes up. And no matter what, if you're at $10 at Monday and you're at $10 on Friday, you will have the same exact profit. While on the other hand, when we do options, we know that we have to be able to pick the expiration date. We know that we have to pick the strike price. We know that we are going to have a certain amount of time to be more successful. So let's just think about something here, team. When we plan on jumping into a stock, let's say MSTR, and we see that MSTR is getting a little bit weaker. I'm saying MSTR, this play is going to continuously drop and fall and fade. There are two different options that we can do here. Number one, I can short shares. Number two, I could short or do put contracts on options. Now, what is so great? The great thing would be if I wanted to get 1,000 shares over on MSTR, every dollar that this drops, I would be making $1,000. What's the issue here, team? It would take me $1.6 million of an account to be able to get 1,000 shares on this play over on MSTR. So the thing is, as you guys realize, it's going to be extremely difficult to be able to afford that much. It's not going to be easy to be able to have that big of an account that I can go ahead and jump in on shares. So the issue is most people head on over to options. Now with options though, we need to have a few things correct. When we are on shares, all we need to get right is the stock going to go up or is the stock going to go down? When we're in options, we not only have to guess what stock is going to go up and which one's going to go down, but we also have to pick within a time frame, the expiration of when it's going to go up or when it's going to go down. And we also have to pick the price that it has to exceed before the time frame ends, if it's going to go up or if it's going to go down. So if you ask me right now, which is easier, shares or options? Shares is by far easier, which is why so many people just add a little bit of money into their Apple investment long term, or a lot of people add a little bit money on their Tesla investment long term, and they have shares because it's very difficult to pick the winning stock. Now, to even add on top of that, is it going to go up or down within a time frame? And then to add even on top of that, up or down within a time frame to a certain price. That's what option trading is. But since we do have more that we need to calculate, we also have a better chance of success. So for instance, if we have a $10,000 account and we want to be able to buy shares of MSTR, we are getting barely no shares whatsoever on MSTR because it's a $1,618 stock. We're going to be able to afford what, 4 or 5 shares maybe, of MSTR. It's not going to be much. But if I have a $10,000 account on MSTR, I could be able to buy 1, 2, maybe 3 contracts. Now, contracts, for those who do not know, are going to give you 100 shares for that time period. So instead of just having 1, 2, 3 shares of MSTR, now I'm able to get 1, 2, 300 temporary shares on my contracts. So you could see 300 shares is going to be able to pay a lot more money in a quicker amount of time, which is what is so attractive to buyers. So many people want to buy on options because they're saying to themselves, I can make a lot of money. Yes, you can, but with the opposite side, you can also lose a lot more money. So when we break this on down and we're trying to figure out, okay, hey, MSTR, what do I want to get involved here? MSTR, first things first is we have the expiration time. I have until April 5th. I have until April 12th. Now, obviously, the answer is, why don't we just give ourselves as much time as possible? The more time that we give ourselves, the more expensive our contracts is going to be. So if we have a small account, we might only be able to afford April 5th. Now, Deck, what price do we have to get to before April 5th? So let's say we're doing puts, which means we are betting that it's going to fall. Well, Deck, why don't we just put a price that's very close to it? It's at 1,620 right now. So why don't we just do 1,615? So we bet by April 5th, it's going to go down to 1,615. 1,615 and we're going to start dropping. Look, it's already going down to 1,615 right now. Let's get involved on these puts right here. Well, again, you have to realize the closer you are to the current price, the more expensive your contracts are going to be. So basically, if you have a smaller account and you want to make as much money as possible, doing larger blue chips is usually not the way. Usually what I would say is look for penny stocks, look to be able to look for those quick pumps, look for those quick dumps. If you're saying, hey, I just don't have the risk tolerance for that, well then buy shares and allow these stocks to be able to build on up. And you're saying, no, I'm willing to go ahead and take a little bit more chances, well then you do have to be able to study options. And options, if you do have a small account, unfortunately, you can't buy yourself a lot of time. And if you can't buy yourself a lot of time, you probably can't buy yourself, very close contracts. So the way that you have to make money on these swing trades is going to be doing closer expiration, which means I'm limiting my time, and I want to be able to do a price which is not out of reach, but it's going to be difficult to get to because then I'll be able to make a lot more money. So for instance, I can see that MSTR usually gets wild climbs, wild rips, wild dumps here. We know that April 5th is this Friday. It's Monday right now. So we do have 4 days for us to be able to make some money. So MSTR right here, team, when we take a look over on this play, I would say a good reasonable area would be maybe 1,575. So April 5th, 1,575 put contracts, and then you can afford 1, 2, 3 contracts. It's a balancing act. It's a balancing act between how much time do I have and how far is this play going to be able to come on down to. Yes, you can make contracts extremely inexpensive if you want to. Do April 5th, do put contracts and say, oh, I'm gonna do put contracts that it's gonna fall on down towards $1,000 here. Yes, traders, that would mean within the next 5 days, we're gonna have a red candle all the way down to this blue line. What are the odds of that happening? The odds are very slim. And since the odds are so slim, they're going to be very inexpensive contracts. But the odds are against you that you probably are going to end up losing all your money because that's not going to happen. So you have to be able to figure out what's the most realistic opportunity. But when you see people on Wall Street Bets, on Reddit, when people say, I turned $100 into $10 million, how did they do that? Usually it's a bet like this. I'm giving myself 4 days for a stock to fall $600. And you know what? Sometimes that does happen. And when it does happen, you might buy these contracts at this point for a very inexpensive amount. These contracts are probably cost $200. But by the time it comes on down towards this, these contracts are now going to not be worth $200. These contracts are now going to be worth $20,000. So imagine getting 20 contracts at $200 and selling 20 contracts for $20,000 a piece. So basically it comes on down to you got something inexpensive, now they're extremely valuable, and now you're selling them while they're extremely valuable. So when we're talking about swing trades and the right way to be able to place these orders, it does come down to practice. A lot of times when I'm doing a multi-day hold, you have to give yourself more time, because if you don't give yourself more time, you are going to be fighting time decay. Time decay is going to be that hourglass. You guys know what I'm talking about? You ever seen in those movies, those hourglass where they turn the sand over and the sand comes right through the middle and say, you have 1 hour, you have 1 day to be able to do this mission, or whatever happens. So basically that's what we have on stock trades. We have an hourglass where really we have a certain amount of time until our contracts become worthless, until they become no point whatsoever. They're going to lose us all of our money. So what we have here is we have our X and Y axis. We have right here, when we first get involved over on our play, we have our contracts up this high. They are extremely high in value. So we have our value right here. At the bottom, we have our time. As time progresses, here is 0 weeks to our first week. Here is 1 week to 2 weeks. Here's 2 weeks to where we have our expiration at the end of the 3rd week. We are always going to see our contracts do this. They're going to keep fading and falling and dropping and fading and falling and dropping until they are worth absolutely nothing. So the best way to be able to make money is if the S&P 500, if MSTR, if Tesla, if whatever play that you are getting involved in is going to be able to make its strong move in the beginning of your trade. So you are betting that this play is going to fall. Now, as this play falls, guess what's going to happen? Your contract's value is going to be able to go on up, because your value is still doing very well and your value is going on up very high. But now let's say for the next few days though, we just move sideways on the stock. The stock moves up a little bit, the stock moves down a little bit, the stock moves up a little bit, and you don't get out of your position. Where you are heading to your ultimate finale of it becoming worthless. So as again the stock consolidates, your contracts are going to now come back down to where they started, because you again not only need to predict what the stock is going to do, you have to predict in the certain time frame and what price it's going to get to. So you want to be able to get that price moving right away, because if a few days go by and you're not still consistently moving on down, that's when your contracts are actually going to become more worthless. So you might say here, and I see a lot of traders say this all the time, we have this happen where the stock is in the red, fell on down, and we are actually lower than where we started. We started here and now we're all the way down here. We are lower than where we started, but your profit, as you guys can tell, is all the way back down to nearly nothing. You lost not only your profits to nothing, you lost your entire investment. Well, why did you lose your entire investment? Deck, I put in $5,000 right here. I was up $1,000 right here, but now I'm down $5,000 right here, because you held those contracts until the end of the expiration. No matter what, no matter if the stock is sky high or if the stock is all the way on down to the bottom, whichever way you want, if you hold your contracts all the way to the end of the expiration, they are going to become worthless. So I see this happen a lot as well, where I see someone get involved into a play, a stock falls, dumps all the way on down, dumps all the way on down, dumps all the way on down, all the way down here. You just turned $5,000 right now into $25,000. You're up 20 grand, and you say, Deck, I'm going to keep holding it. And the stock will still just sit all the way here for the next 2 to 3 weeks. But guess what? You're going to be up 25 grand, but the next day you're only up 22 grand, and then 20 grand, and then 19, and then nothing. And now down 3, 4, 5, whatever it is. And now you're back down to zero. Remember, it doesn't matter if the stock goes up or down. You want to try to be able to make as much money as you possibly can within that first half of your contract. That first half of your contract is when it's going to hold the most value. The second half of the contract is when it's going to decrease in value extremely quickly. So you have to say to yourself, okay, I'm getting involved in MSTR right here. MSTR, April 5th, I need to basically have the stock make the move that I want it to before Wednesday. If we again go to Wednesday and I don't have a move, let me get out, because it's going to need a dramatic move for me to actually become profitable. So a lot of times when I'm looking for overnight holds or whatnot, I always actually go 2 weeks out just to give myself a little bit more time. Give yourself more time. You might have to pay a little bit more, but it is worth it for you. Now, you might be saying, all right, Deck, this is all great, but how do I find stocks that are going to be good long-term investments? How do I find stocks that are actually worth, great swing trades? Well, a couple different ways. We do have blue chips, we do have penny stocks. Penny stocks, guys, the easiest and best way to be able to know this for penny stocks is to be looking for stocks that have strong momentum. Momentum plays is what it's all about in the penny stock world. Unfortunately, we haven't seen any big momentum plays recently, but the thing that you guys want to do every single day is look at the top gainers. Look for stocks that are up 80, 90, 100, 200, 300%. Those are the ones that have the best opportunity and the best chance to be able to have a gap up overnight and more continuation. A gap up overnight and more continuation. What it comes on down to is usually the way you close is the way you open. You see a strong close, you usually have a gap up and a strong open. So if we're talking about penny stocks here, we want to be looking for momentum to be able to carry on. If you see a stock that has a huge spike in the morning and comes crashing all the way back on down, you don't want to say, oh yeah, this is the one I'm swing trading overnight. Well, why? Well, hopefully it bounces back on up. Sometimes I see traders do this. I see stocks again, spike on up, dumps all the way back on down, and then traders say, yep, I'm buying it for a swing trade right here. And I say, why? And they say, well, I hope it keeps going up. Guys, when you have a ginormous spike, and now the ginormous spike has given everything back, it's done with. What you need in the penny stock or the micro cap world is you need a stock that does this. Spike on up in the morning, fall back on down, consolidate, spike up towards new highs, fall back down, consolidate, spike on, and it's consistently climbing. Then you can definitely look for momentum to carry up overnight, and that leads to new highs. So when you have stocks that are consistently moving up throughout the day, not just in the morning, stocks that are not dumping on down, but consistently hitting new highs, 100, 200, 300%, those are going to be some of the best plays that you guys can be focusing on and looking at. As for blue chips, one of the best strategies that you guys can do, as I always say for swing trades, is what? The 13 EMA. The 13 EMA is one of the best ways to know if a stock is worth, getting involved in. Let's just go with Meta, okay? Meta. Let's get rid of everything other than the 13 EMA. Get rid of the 200-day moving average, get rid of the 50-day moving average, and we do have the 13 EMA right here. 13 EMA is what I call the flexible trend line. You guys have heard me say this. If you guys watched again my video on indicators, you guys already know all about this. But really, when we have a trend line, we know whenever we are above the trend line, we're considered bullish. Whenever we're underneath the trend line, we're considered bearish. So if we can find stocks that are always above a trend line, we could just hold them until they break. That's what the 13 EMA is all about. So for instance, if we spot Meta. Let's just pick a random area. I'm just gonna pick right here. I can buy in at the price of 228, and I don't need to do anything else. If I buy shares, if I buy a long-term contract, I can now say to myself, okay, I buy in at 228, and now I don't have to worry about green days. I don't have to worry about red days as long as we stay above this green line. So we're staying above it. Hey, here's a red day. I don't need to get scared. Green day comes. Oh, red day. Do I need to get out? Nope, you don't. You're still above 13 EMA. Deck red day. Don't need to get out. Deck big red day. Doesn't matter. You're still above 13 EMA. Still above 13 EMA. Still above 13 EMA. And then finally you crack the 13 EMA. Guess where you crack the 13 EMA right here? You crack the 13 EMA at the price of 300. So if you just watch this little stretch right here, you have now gone from 229 all the way up towards 300 without doing anything whatsoever, just because you stayed above this green squiggly line. Now, on the contrary, we can see that right now Meta is actually underneath the 13 EMA. So guess what you could do at this moment if you wanted to? You could say, all right, hey, I'm actually going to short Meta. I'm going to do put contracts. And as long as it stays underneath 500, I know that that's going to be a strong resistance line. I know that 13 EMA is going to be holding tough. And I definitely think there could be opportunity for this to be able to feed back on down. I definitely think there could be opportunity for this to be able to fall. I definitely think there could be opportunity to be able to drop as we're no longer bullish, but we're actually underneath it now on the bearish side. So we could again be able to do that. NVDA, same exact thing. Take a look right here. NVDA traders, we see that we're above the 13 EMA. Look at this. Deck, do I need to get out? Do I need to get out? Do I need to get out? Do I need to get? And then finally you get out right here. You just went from the price of $4.95 all the way up to $6.95, a $200 climb without you having any sort of fear whatsoever. Now, obviously this is a great climb, but you know, it will work with bouncing and bouncing and bouncing. You can see all the way over here as well, you know, just jumping in, and as long as it holds that 13 EMA, you are good to go. So when it comes to blue chips, never do a swing trade on the call side if you're bearish underneath the 13 EMA. Never do a call side like on Meta, for example. If we're underneath the 13 EMA, we want to be bullish, not bearish. Never go opposite of the green. Now, what else can we do to be able to find good plays also? We do have a great lesson over on my YouTube, Finviz Screeners of 2024, and we want to be talking about plays that are having great setups here, team. Plays that are going to be great swing trades. So what can we do here? Swing trades, finviz.com, EPS growth, positive. So we want to go to positive. We want to go EPS growth, positive. We want to go dividend yield. We want to go positive. Sales growth, positive. We want to go to return on assets, positive. We want to go over to EPS growth this year, positive. EPS growth, positive. Sales on next year, positive. Sales growth, positive. We want to be positive on everything. This is going to be giving us a great starting point. Then what else do we want to see here? RSI, slightly overbought. Now, why slightly? Because this is not long-term investments. This is swing trades. Swing trades, if we're slightly overbought, we know that we have positive momentum. We don't want to be buying stocks that have a 90 on the RSI, stocks that have a very slight overbought, which have positive momentum if we plan on holding for a few days. That's going to be great for us. We also want to be staying above. They don't have the 13 EMA, but it'd be very nice if we can stay above, let's say, the 20 moving average. So I always like to go above. Right here, we can also go 50-day moving average, and we can also go the price above. So now again, we got 89 plays right here, which is absolutely awesome and absolutely great. Is there anything else that I want to really be adding? And I can always add as we go. I always like to go insider ownership. Insider ownership. Let's just go over 10%. So this basically shows that not only are they positive, but we also have insiders holding it. We're moving on up. We're slightly overbought. We are again 50-day moving average. And let me just see institutional ownership. We could go over 10% as well. This is giving us even better plays. And look at this, guys. We've gone from 25 stocks. If you guys want to see what we started with, click screener, scroll on down. We start with 9,489 options. Now, I have no idea what these plays are going to be, but I'm going to guess what they're going to be. They're all going to be plays that have been moving on up over the last few months that are probably above their 13 EMAs that are going to be great plays. So I'm going to move this on my other screen, but we're going to take a look over on AAON, AGR, and just kind of go through this list a little bit. Let's just see what we have here. AAON, starting on off. Take a look right here. AAON from $50 now up to 87, holding this. Let's go through some other plays that are looking very solid at this time. Let's go with AM, right? Just kind of going through the list. AM from $11 to $14, a little bit smaller. Let's go with AOS right here. AOS from $65 to $90, doing absolutely great. BRKR, Brucker. You guys can see $56 to $93, holding this 13 EMA. Absolutely beautiful, absolutely awesome. This is great. DKS Yes, holding the 13 EMA, absolutely beautiful. Look at this beautiful climb, beautiful rip, beautiful run. You guys can get what I'm going for. MPLX here. MPLX holding the 13 EMA, bouncing off this area, going from $35 to $41. You guys can see the list right here. But team, when we're thinking about swing trades, there's a few things, of course, that I wanted to be able to break down for you. Number one is if you are going to do shares, great, make your life easy. If you're going to do contracts, there's a lot of things you need to think about. What's the price? What's the expiration? Are we going up and down? What stock? You know, there's a lot of things that you need to be able to do. You can increase your account dramatically, but at the same time, you can also decrease it dramatically. If you're looking for swing trades on penny stocks are going to be different than swing trades on options. Swing trades on blue chips are going to be a little bit more simple. Why are they a little bit more simple? Because they're kind of like more big boulders. You roll them, they got the momentum. Penny stocks are a lot more volatile. Penny stocks look for momentum, spike up towards highs, gap up, you can keep going. As for blue chips, above the 13 EMA. You have that free scan over on Finviz. Follow that, make that money, get ready to crush it. Make sure you guys realize this every single day. We are live on Tradecaster.com doing this with you guys, making sure you guys have the best plays possible. But I want to review the good, the bad, swing trades on penny stocks, swing trades on blue chips, the best indicator, what option trades, all this stuff to make sure that you are realizing what goes into an overnight hold and a multi-day hold. So crush it, use your head, and be able to make that big time profits.